Good morning and welcome to the market forecast. It is Monday, July the 26th. I'm John Hoagland. As always, thanks for trusting me with your time. And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience. As far as economic numbers this morning, 9 o'clock, we're expecting the new home sales number due out. Really one of the only majors for us today. Well, the only major actually, but it's a very busy week in economic numbers. Fed meeting we've got this week. We've got FANG stocks coming out this week. So just kind of look over the economic number schedule for this week. Tomorrow morning, 7:30, durable goods orders. The FOMC meeting begins tomorrow. We've got Case-Shiller home prices, FHFA home price index, consumer confidence, and Richmond Fed manufacturing index. Wednesday, international trade in goods, wholesale inventories, retail inventories, EIA petroleum status report, and then of course the FOMC announcement on Wednesday, and at 1:30 the Fed chair press conference. Thursday, GDP preliminary comes out. That's going to be a good one for us. Jobless claims, pending home sales, natural gas report, and all. Last but not least, on Friday, we have unemployment cost index and personal income and outlays. So lots of information due out for us this week. As far as other news is concerned, yes, U.S. stock indices look to open lower to begin a very busy week of data and earnings. Of course, FANG stocks begin announcing on Tuesday, starting with Apple and Google tomorrow, Facebook on Wednesday, and Amazon on Thursday. Today's notables: Lockheed Martin already out, beating expectations. And after the close today, we are expecting Tesla. Tapering talks are going to be a likely topic at the FOMC meeting this week. Probably will be waiting for more concrete information on that after the Jackson Hole Symposium in late August. Bitcoin gets a nice bid last night after Amazon says they're possibly adopting a payment strategy for crypto. Imagine that. And crude is struggling with potential loss of demand due to COVID infections, which seem to be rising with the new Delta variant, and we hope that is a very short-lived situation, of course. Make sure that you smash the lucky like button. Share, comment, question, feedback, and heckling are always welcome. And subscribe to our YouTube channel. Looking at it just a few minutes ago at the VIX, the dollar index, and the 10-year yield. The VIX is up about 7% this morning at 1847. Dollar index down slightly at 92.79, and the 10-year yield down also at 1.26. You know, really see a little bit of a bid here in the 10 years this morning. As always, I got to say good morning to everybody. Brian, first one in the room, you win the prize. George, good morning. Ednelson, good morning. What a beautiful Monday. Thank God the week has started. Let's make lots of money. Sounds like a good plan. Murph, good morning. Great week full of opportunities ahead. Yes. Tone, good morning. Tone saying thinks this week will be fun. Stacking bananas, good morning. Lemur, Frederico, Caesar, Jim, Zareen, Drones over Texas, good morning, everyone. You're on time today, Drones. Ryan Williams, good morning. Happy Monday, of course. Tim, Prophet Eon, good morning. Greg H. Harry Gordon, good morning. Jerry is awake. Hopefully John is too. I can hear Lacey. She's awake in the kitchen there, moaning a little bit because I'm talking to you and not to her. She believes that she is the center of the universe. April Gonzalez, good morning. Fred Decker, question for Oak. How should a trader determine that market conditions are not favorable to the trader's trading plan, and the trading plan should call for changes to a new product? Thank you. Drones over Texas. Yes, Mario. Good morning. Fred, your question is one always for the ages. It's very difficult to determine to determine market state altogether, it's always going to be a hypothesis. If you tend to trade better in trending markets and the market has fallen into balance, it- you know, I don't encourage people jumping from product to product or changing their strategy, or actually, it's the lens that we use to look at the marketplace. I've always felt as though the market profile is a picture of the market, and in that market profile, I believe that the market is telling us where it's trying to go, if it's trying to go anywhere. So I'm looking at usually about 6 markets for opportunities, and that's a lot to me. I mean, I'm not the sharpest tool in the shed, man, and sometimes it gets to be a little bit too much information. So I have to kind of put something on the back burner. Sometimes you'll even hear me say that one of the markets that we look at, I'm putting on the back burner for the day. So it's not necessarily switching to a different product. Markets change and they can change very quickly. It's keeping a consistent lens. And if your lens is adaptable, like I believe the market profile is to different products, watch some different products, of course. But as far as making sweeping changes and saying, well, crude oil doesn't work for me anymore, I'm going to go try and trade the S&Ps, there are some personality changes between those two markets. And and again, it's not necessarily the product or the market state. It's the recognition of the market state and the our ability to have a strategy for any market state. If we think about it, Fred, there's basically trending and range bound. A trending market, if it's trending higher, we're going to look to buy weakness. If it's ranging, we're going to be patient. We're not going to be trading anywhere in the middle of those ranges, and we're going to be focusing on the extremes for reversion trades. So it's not, I don't think, necessarily, you know, that conditions are unfavorable to the trading plan. The trading plan should be adaptable to the trading, to the market conditions, to the market state, if that makes sense. Um, Making sweeping changes like changing to a different product altogether because the market isn't kind of congruent with your favorite market state. You end up with a little bit of strategy jump there, and we don't want that. And I know you're a profile guy, Fred, so when you can recognize the opportunities and gauge the nuances for what's most important in the current market state in your market, you're going to be able to adapt that market profile and the knowledge of your auction process. And all these markets are basically in an auction process. You're going to be able to adapt that to different products and be able to recognize, I think, when the market is more favorable to a particular trading plan that you prefer. Fred, thanks for your thoughts. I feel like I'm good at following my trading plan, almost to the point of tunnel vision around trading only certain products, and that's okay, Fred. We don't have to trade every day. If the market is not, you know, let's say you've got 2, 3 hypotheses for what the S&Ps are going to do today, and they open up, and none of those hypotheses seem to make sense. It's maybe better just holding off and waiting for an opportunity as the day goes on, or just being patient and waiting for the market to um, to kind of turn around and look more like the market state that you're looking for. Drones, how much of a deviation is the question? I'm not sure what to say about that. April, what is your advice, John? I'm 7% down draw after a long time of consistency. April, size down. Um, be stingy with your trade locations. I find that a slight change in entry sometimes can be helpful. I hear a lot from traders that my strategy is working, And if something changes in the market, maybe it's a little bit more volatility, maybe it's a little less volatility. You got to be able to gauge and account for that. But when I'm in a down draw, I'm definitely downsizing. I'm probably trading one contract, and I'm going to get really stingy with my trade location, almost to the point where if I keep getting stopped out and then the market goes my way, I'll just start thinking about, okay, I'm obviously getting in where a whole bunch of other short time frame traders are getting in, and they're fishing out our stops. So I'll actually think about, okay, I'm thinking about taking this trade. I know my stop needs to be here. I'm going to try and get in where I would normally put the stop for this trade. And I've had some good luck, trying to pull out of a down draw from doing that. Now, there's lots of different things, and we don't have time to talk about them all today. But come to the group coaching session on Wednesday. Pose the question. We'll take a good look at what of different things that we can think about in that regard. There's the link for group coaching. That's on Wednesday at 1 o'clock. FOMC releases at 1 o'clock. I'm probably going to start the coaching meeting at 1:05 so we can watch any fireworks that do get blown off here at 1 o'clock on Wednesday for the FOMC meeting. So, we'll dive in there. All right. So, I had solid charts until I opened the forecast. I'm going to try and get into these charts here, and I'll take a look at some of the other questions and comments that are coming in here once we get through the charts. And why this continues to happen. But here we go. We've got the charts. All right, let's take a look-see. Okay. What is this? That's not a good omen. Okay. Volume has been really kind of getting crushed. It's really been tumbling. We've got 3 days of open interest increase after expiration. So there's money coming in, but the volume is really dried up. Look where we are here. We're in basically central area inside weekly kickoff level. Our initial low for the overnight session, as well as the low for the overnight session is exactly halfway between this high and this low. This halfway mark is going to be somewhat pivotal for us today, if we even get to it. It feels like there may be somewhat of a hair trigger to this market. There's a lot of forces pushing price back and forth. If one of them falls, if something happens, I think that there may be a good move, but it's probably going to be more of a headline-driven move than something we're going to be able to find technically. So I'm going to be cautious and patient today. Here's the 30-minute chart. Okay, we've opened, in essence, in range and in value. Okay, we were kind of thinking we had some overnight shorts. They have reconciled. Were we going to hold, and were we going to open and hold above value, or were we going to accept inside of value? Obviously, we've accepted lower pricing because we've already raced all the way through Friday's value area low. Where are some important levels to look for? Well, I mean, we've got this area here, which is the low from Friday, value high from Thursday. Not looking that as a very strong level, looking more like the naked point of control, which takes us down to that 50%. Move and down to our overnight low. This looks like there may be some fish there. There may also be some fish if we can get back up to our our recent high here, high of the range from Friday and high of last week's range. So trying to stay a little bit patient. And I'm thinking that this might be an interesting level, but it's nothing that I'm going to respond to, I don't think, because it just doesn't look that strong to me. And that said, it probably is going to work wonderfully. um, E-mini S&Ps. Okay, we've got a lot of data and a lot of earnings out this week. We've got an inside trading session. In other words, the extended trading hours were inside Friday's extended trading hours. Futures volume has been relatively weak on this move to the upside, but we have been seeing some expanding open interest, including a 10,000 contract increase estimated on Friday. These markets are extremely resilient. Without bad news, they have the tendency to just continue to rise to the upside. I'm going to try and be patient again. It's Monday. Monday's typically not my best trading day. And I'm going to be looking for opportunities as the day goes on because we are going to be opening inside range and inside value. In large part, there goes the charts. Hang on 1 second. I'll have those up for us lickety split. This is upsetting. I hate this. I do apologize. Okay, so where was I? So there's three levels in this upside move that put in an all-time high. This is we left a gap from Thursday to Friday. This is going to be relatively important in even a longer time frame. We're going to be opening in range and in value, maybe some overnight shorts in this market, but nothing that I really think that we're going to really get a big response to. Where are the fish in this market? Well, we've got some confluence up here. We've got point of control. We've got settlement. We've got value high, and we've got last week's high and Friday's high up in this area. There's probably going to be some fish up there. Then also we're looking at this kind of 43.90 level where the market really kind of pushed higher on Friday and then kind of consolidated. I'm looking to see if this market can hold this level because I think that's going to be kind of the second favored upside level for us to look for. I would be looking, if we were to gap higher, we would probably continue to move higher. What I'm looking for is acceptance of price in this level. If we start to show a rejection of this level, if we take out this gap to the downside, we're back in an area where we have some target-rich environment with these naked points of control like we just took out last week. Nobody knows what's going to happen. I'm going to stay patient because, again, we are opening in range and in value. I think there's some fish up near the highs here. I think there may be some fish in this gap area. But, again, I'm going to stay patient because at this point, we're not open yet. Looking like we're going to open lower, looking a little bit less like it every minute. So I'm going to be patient and look for those extremes for my opportunities. NASDAQ. All right. Another new all-time high in the overnight session last night. Look at that. The Energizer Bunny just keeps going and going and going and going. All right. Continued, all-time highs. FANG stocks, we're looking for those releases, those earnings this week. You think maybe there'll be a little bit of a resting period here on Wednesday because of all this information due out as the week goes on. We've got a little bit of a boost in open increase. Maybe a 4,800 contract boost in open interest. That's pretty big for the NASDAQ. We have found acceptance above last week's weekly kickoff high, which is that big fat round number of 15,000. We're looking for a continuation or a measured move up to about 15,600 if we can keep this momentum moving to the upside. As I mentioned Friday and Thursday, it's going to take new business. It's going to take buyers to come into this market. And to do that, And it's probably going to take some weaker hands shorts to try and push this market higher as well. Take a look at the 30. Yeah, we had some overnight, actually, no real overnight inventory. Sorry about that. We are settlements right here, 15,098. No real overnight inventory. Opening in range and in value. We do have a little bit of a gap down here below. The question really was this going to be an exhaustion gap, or is this going to be just a gap to fill and then continue to the upside? Don't see it as an exhaustion gap because we've opened above it, and I know that we've just lost our charts. I'm going to get those back up here post haste. It's very upsetting. Okay, there we go. So again, I'm going to try and stay patient. We're looking for fish. No reason to rush into anything on a Monday before all this new information due out. I'm going to try and stay very patient in this market. Gold. Gold is also telling us it really doesn't have any idea where it wants to go. I mean, the markets are always telling us what they're thinking about and where they're thinking about going. And this market on this daily chart just says to me, it's just imbalanced. There's just a lot of indecision, a lot of long shadows on both sides of the bars. We did add 6,000 in open interest off this low here on Friday. It bodes for change, but we're not seeing that change just yet. I'm going to have to really try and stay patient if I'm looking for bigger opportunities here. It's going to be true until it isn't. I think we're in short time frame control, which means short time frame levels are likely to be respected. Where are we? We're at settlement. There was some overnight inventory that's now been reconciled. We're back at settlement. We're back in range. We're back in value. If we're looking for opportunities for entries, again, we're looking at shorter time frame levels with which to lean on, and we don't have in the neighborhood any naked points of control. We don't have any. Our nearest one is all the way up here at 1824, which would lead us, to our weekly high and to weekly kickoff high. But there's no impetus. There's no momentum to do that. And that said, watch, something will change, and we'll find the momentum to do something like that. But again, inside range and value, sitting here at settlement. I'm not in any hurry. I don't see any really standout areas where the fish are hiding right here. This might even actually be on the back burner, as I mentioned a little bit earlier. I don't see a lot of good opportunity here, so I'm going to be probably looking at other markets for opportunities until something changes. You always got to keep one eye on it, right? And in the euro, I mean, it's such a similar situation to gold. Indecision, downside structures intact here, a little bit different than gold. Imbalance, short time frame controlled, short time frame levels likely to be respected. We added 800 in open interest off the low here on Friday. Not a big number. I'm looking at this and I'm just kind of going, blah, blah. It just doesn't say much to me. So I'm going to probably be looking at this as a potential back burner market. Okay, we've got a naked point of control here. This was reached in regular trading hours. I don't believe it was reached this was reached in extended trading hours. I don't believe that it was checked in regular trading hours, and I'll check that as soon as we're done. We did open with a gap. We've closed the gap. Now the question is, are we going to reaccept in value or range from Friday, or are we going to reject? Come up, recheck this naked point of control. Then we've got last week's high above that, and then weekly kickoff high, and another naked point of control above that. But the market is really just kind of in an indecisive kind of random walk here, and I'm going to try and stay patient. Back burner, maybe. And, okay, last week our weekly kickoff high, which is this gray line right here, was just a complete magnet. I think there were opportunities away from it, but it always seemed to come back to it. Last night we finally found a level of support down there. God bless it. My deepest apologies. I don't know why it's just so random. It won't happen for 2 3 weeks, and all of a sudden it'll happen a few times. I'll get back on the horn with the program, the platform or program provider. So last week's weekly kickoff high finally became supportive last night. 1304 and 3 ticks. I got within a tick and a half of it last night. Found at least some support there. We lost 20,000 in open interest on Friday as the market continued to just kind of digest. Now I think we're starting to kind of come into a pennant formation or a almost symmetrical triangle. I'm just throwing these on here very loosely. Okay, we break out either side of that, it might provide a bigger opportunity. 30-minute settlement all the way down here at 133.07. The market kind of holding some overnight inventory to the long side, continuing to try and reconcile that. We've got the naked point of control here that we ran through last night that we've just checked to the tick here in regular trading hours. This is an opportunity. We've got a market that is trying to close the gap that has been unable to. If it can't close the gap relatively early, we go in the direction of the gap, which would have us looking for longs. This move back down to this point of control has given us that opportunity, and it's a pretty good risk limiter as well. So we've got a pretty decent opportunity, perhaps, to see if we can find a little fish to the long side here in the 10-year. Again, it's not that expensive to find out if we're not going to close the gap. That's what I'm looking for, is cheap trades. Cheap trades. Fred, I know you've heard that number of times. Right. I don't. Oh, okay. So their standard deviation is what kind of standard deviation should you look for to find a market strategy that's not working? I've never used a standard deviation for that, but I see what you're saying here, Drones. Yeah, your strategy may be off by one standard deviation and can still work. Yeah, I'm not a fan of abandoning a strategy because it doesn't work. It's gentle changes in trajectory that might help it remain profitable, and changing that because adding a standard deviation for price or entry can probably still work. It seems like anything can work. Nothing works all the time. Nothing never works, and once you get the right answer, the market's going to change the questions. Algo Lover. If EF buyers remain bid above 43.66, then 44.23 is the target. We got some ideas there for Algo Lover. Thank you very much. Drones. Oh, you signed up for group coaching? Good. I'll be happy to see you there. April, good to see you there. Yeah, Drones sitting on his hands today. Another level for crude oil, looks like 2072.50. Theo, good to see you. Jay, Drones. Ocean Blue, am I the fish? Huh? Jacob, yeah, big fat round number. Yep, Brian Beamish is in here from time to time, Fred. You may run into him. Get rid of that. You might run into Brian in here from time to time, Fred. He's been stopping by once in a while. Murph, the problem with NQ traders is not that they're trading NQ because they're not patient. I know I'm not. Otherwise, I'd be trading ES. Boy, that NASDAQ, it just certainly does move pretty quickly. It gives me heart palpitations. Hello, Sergey. Good to see you. Welcome. We've gone a little bit long today. It's 8:30. Equities are opening up. Take your deep breath. Stay humble, grateful, and creative today. It's Monday. Take your time. No reason to get cut up early. And, if you get on the right side, God bless. Get out there and profit. Trade well today. Dan will be with you for the market recap today at 3 o'clock. And I'll be back tomorrow, 8 a.m. Central. We'll see you then. Trade well. Looking for your success. So have a